This video is based on the technical analysis of the Chainlink cryptocurrency, and at this point in time, we find ourselves on the monthly chart. And let's have a look. What do we see in regards to the monthly chart that's interesting? On the monthly chart, we can see that at this point in time, the market has given us what seems to be a very interesting double bottom over here, which has a neckline at that point, more or less, guys. And remember also that whenever we have these structures, such as this double bottom or W structure, we want to see price closing sufficiently above the neckline and then come down to the neckline to test it out. And where we have that neckline, which is also now a very strong level of support, is where we would look for those potential buy opportunities, right? So we want to see price from this level move further down to that level, and at this level is where we would look for those potential buy opportunities, especially if the level aligns with any key numbers that we have in regards to the Fibonacci retracement tool. And in fact, let's utilize Fibonacci and see if at this point in time we have any key numbers that align with that neckline, which is also a strong level of support at this point in time, right? And you can see, guys, that in regards to this W structure, which has a neckline over there, the neckline actually aligns with the 61.8% Fibonacci retracement level, right? So as I said, should price come back to that level, at this level is where we may potentially look for those buy opportunities. And should we buy at this point, I believe that our first take profit should be around this level. Why do I say that level? That is because that level is a very strong level of resistance at this point in time, and our second take profit should be around that level, and our third take profit should be around that level, which is the previous all-time high, as you guys can see, right? Having said this, let me just actually delete this Fib2. Having said all this, guys, as much as I'm saying that should price come back to this level, and at this level we would look for potential buy opportunities, just also bear in mind that the market had given us this overextended M structure, which also had a neckline at that point. And just like with W structures, whenever we have these M structures, ideally we want to see price again closing sufficiently below the neckline, hitting back up to the neckline to give it a test, and where we have that neckline is where we would look for further sell opportunities. And especially if the neckline, which is now a very strong level of resistance, aligns with any key numbers that we have in regards to the Fibonacci retracement tool, right? So we may potentially see price from this level actually move further down to disregard this very strong level of support and actually move further down to around that level, right? And that is because this M structure started here, went up, gave us the double top or M structure, went back to the neckline, and possibly may push further down to close more or less in line with where it had started. Another thing that I'm saying, in other words, is that this double bottom over here may be a trap. And the reason why I say so is because whenever we have these W structures or double bottoms, what normally happens is that a lot of traders and investors actually buy on the second leg and they place their stop losses just below, right? So we have a lot of liquidity stuck here in the form of stop losses, and it is quite possible that we may see the market move further down to trigger all of those stop losses, right? So at this point, the market looks very much bullish, but just be careful as we may potentially see the market actually continue with this double top, and it may close in line with where it had started. And then only at this point is where again we may see the market potentially give us a W structure and then move further up to all of those very important levels that I spoke about earlier.